Hi, thanks so much for tuning in. You're watching BQ Prime, and we're here to talk about arguably what will be the stock, or rather the stocks of the day, Tata Motors as well as Tata Motors DVR. Of course, the results were posted yesterday, but the bigger talking point happened with regard to the corporate announcement that was made with regard to the DVR shares and the fact that the company is going to be cancelling these DVR shares. All holders of the Tata Motors DVR will receive 7 ordinary shares of the company in exchange for 10 that they hold. What are the implications of this? Why is the company doing it? And what should investors do? To talk about all of this and more, I have with me Deven Choksey, who is the director of DRChoksey FinServ, joining us. Deven, thank you so much for taking the time. Hiral is with me as well. Hiral, good morning, and Deven, good morning to you as well. To start with, let's start with a slightly open-ended question, because I think a lot of shareholders will be asking this, Deven. Why would the company be doing this?
Good morning, Alex. Good morning, Carol.
Good morning.
I feel that I think there is an underlying purpose. If you look at the disclosure statement, I think which the company has given, they have very categorically stated something which the market was aware about, that the very purpose of DVR has failed actually. When they launched the DVR shares, subsequently SEBI also came up with a regulation that companies cannot issue the differential voting right shares. So subsequent to that, I think none of the companies could offer the DVR shares, and those companies which issued, like Tata Motors, I think they continued to held on with DVR. But actually the purpose has not materialized, because if you see the difference between the ordinary shares versus DVR shares, it has remained in the vicinity of 40% to 55% in a given market situation all along throughout its listing. And that is not something which is healthy. In the other parts of the world, when I think differential voting right shares are issued, the difference is not as high as what it is in India. I think out there the difference would be somewhere around 25% or so. Even though all other rights, including the liquidation rights, would remain same for DVR shareholders, yet I think this difference has remained for variety of reasons, I believe. Even though despite of liquidity, despite of I think participation index, etc. In my viewpoint, I think this discount had to cut down and the shareholder had to be rewarded with the kind of value. That is the first purpose which I see from the underlying statement. The second purpose that I see from the underlying statement that the company has given, I would think that I think they also want to bring down the equity, shrink the equity. That means it's a very powerful statement coming up from company's side. That on the other side, I think the business operations are assuming the normalcy, including JLR portfolio. And at the same time, I think this particular equity reduction would act as a financial re-engineering process, which would eventually lead to better ROE, ROC ratios going forward. So that is another purpose. And I think the last but not the least, as I see it, I think the company has probably announced a silent statement, I guess, I think in this particular announcement. Probably through the consolidation of this equity, there has to be some game plans related to inorganic growth possibility for the company, which could include, I think, game plans pertaining to the separate listing of JLR as well. That is also one of the possibilities. So in order to avoid the confusion, I think this particular transaction has happened. In a way, it is good for shareholders, because if you see yesterday's price movement, I think the market price discount has come down to 19% on the swap shares, as we call it as now, because I think for every 10 shares, you're going to get 7 shares. If you calculate the arithmetic, probably you will find that I think it has come down to around 19% kind of a discount, which in my viewpoint, I think is a fair discount, given the fact that around 12 to 15 months of period is being considered, I think, for the NCLT-led order coming in and effecting this particular transaction of consolidation of shares into one. So overall, I think the shareholders tends to benefit from DVR as I see it, and that is a good news.
Right. Thanks, Deven, for that, overall structure. But so clearly, benefits in terms of Tata Motors and benefits in terms of shareholders is what we've discussed so far. Now, when you talk from a stock price perspective, the spread that was available between the DVR and Tata Motors is something which was coming in as an arbitrage opportunity for the investors for today. Now, in pre-open, you're already seeing the DVR, which is indicating a 20% up move, right? How do you see the spread? Because do you think capturing that arbitrage opportunity is now going to still be a possibility, lucrative enough? Because the timelines are still 12 to 15 months.
Yes, absolutely, Hiral. I think this arbitrage opportunity will continue in the given market situation. Of course, I think the now the cat is out of the bag, so obviously I think you know the ratio, and as a result of which I think it is going to be more predictable price difference than what it was up till now. So certainly, I think suppose if the 20% move has taken place in the price, I think, or maybe I think with this market starting, it will get confirmed. I would think that I think this particular differential will continue because as I was making a point that when you have 12 to 15 months time to implement the entire consolidation process, what you would now consider is an interest factor. So suppose if I ended up buying the DVR shares today with a conversion into the ordinary shares, obviously the discount I'll ask for because I think this is going to be continuing for whatever the period till that point of time it is getting implemented. So I would think that I think around 17, 19% kind of a discount that I'm alluding to, I think is likely to remain. So as a result of which, I think stock price probably may inch up and not come down as I see it for DVR. Also, the fact that Tata Motors' own performance is, I think, working good. So obviously, I think the ordinary shares are likely to go up along with DVR. So in my viewpoint, I think one can possibly see the upside continuing in DVR. And if my target goes right, I think 1 year down the line, we should be seeing a target price of somewhere around 535 to 550 for DVR going forward.
Right. A follow up to this, Deven, is let's take two scenarios, one for existing shareholders of Tata Motors and Tata Motors DVR, and one for someone who wants to build fresh positions there. Obviously, the spread or the arbitrage opportunity will, actually shrink. And let's hypothetically take that shrinks to around, say, 8 to 10% overall. Now, if that happens, do you think existing shareholders should actually go ahead and unwind their position, number one, right now? And the second aspect is, what would be that, gap where fresh positions could be taken, according to you?
So the first question is relatively easy question, and the second would be slightly a question which I think a lot of math involved in it. But let me attempt an easy one first. Yes, I think the investors should hold on to this particular position which they are having in DVR because, as you know, I think this is going to get converted in 12, 15 months' time. So certainly there is no difference as such as far as I think they're holding into this particular share. The minority shareholders, I think, who are physically holding on to this particular position. The second part of it, I think, what price differential at which one should be buying. According to me, I think the currently, as I have explained, for every 1,000 shares of PVR that you buy, you are paying about 3,75,000 rupees. If you basically, I think, convert the 1,000 shares into 700 shares, because I think it is eventually the ratio, then the actual price coming out to be as 535. So, from a point of view of looking at, I think, the buying opportunity, if you get, I think, this particular stock at a lower price to 535 in next 1 year's time, I think that would be the buying opportunity as I see it. Because that is the difference it will get covered up with in next 1 year time.
Deven, I think we're also going to be set to speak to the management to try and understand some aspects of this, but we're also trying to understand from the investor's perspective what the tax implications of this would be. Have you studied this? And there is also a question about deemed dividend. How does that work?
It's a valid question, Alex, and I must be speaking, I think since yesterday evening it announced, and I think today we haven't been able to get the complete opinion on this particular subject. So maybe I think we'll have to wait for some time to eat the brain of some tax expert and find out how exactly this is going to work out.
Okay, fair point. In terms of, and then see, we haven't spoken about the earnings at all, and you've spoken about potential for Jaguar Land Rover listing as well down the line. We've seen kind of a turnaround story, if you can call it that, for Jaguar Land Rover post the pandemic. I'm sure you've also gone through the numbers, so why don't you also take us through the roadmap as you see it rather, for both Tata Motors as well as Jaguar Land Rover, and in particular Jaguar Land Rover. Do you see earnings trajectory going significantly higher from this point, and do you still see value then in Tata Motors?
Yes, I think the domestic Tata Motors portfolio of passenger vehicle and commercial vehicle particularly, I think they remain absolutely very convincing. Commercial vehicle portfolio of Tata Motors domestic business, I think, is likely to grow significantly given the fact that government spending on infrastructure and industries new business additions, I think brownfield expansion, greenfield expansion, allowing higher amount of consumption or higher amount of demand for the vehicles, commercial vehicles. At the same time, I think with the new roads getting constructed and the logistics being emphasized, in my viewpoint, I think the demand for commercial vehicle is only going to increase from here on. And adding to this sweetener would be the vehicle scrappage policy rather. This is going to create additional demand for commercial vehicles in respective category, the heavy commercial vehicles and the medium commercial vehicles. I think somewhere of around 2.5 lakh new vehicle demand is getting generated in a year. I think on a per year basis for next few years. So that is where I see the brilliant prospects emerging for commercial vehicle portfolio in the domestic markets. At the same time, the passenger vehicle portfolio, which is largely inclined towards the electric vehicles and partly now also continuing with the IC vehicles. In my viewpoint, I think this is a portfolio which is likely to grow big from the current level onwards. As we see the price difference between electric vehicle and IC vehicles start shrinking, even though the subsidy is going out, I would think that I think this is where probably the company would be in a much better position given the kind of market position that they've created. And I always say that what Maruti did in 80s, I think Tata Motors is doing now with electric vehicles. I think they are the ahead of others as far as I think their vehicle portfolio is concerned. And currently they've replaced the IC engine electric vehicle. In my viewpoint, I think this particular situation will change. Eventually, I think as exclusive electric vehicle portfolios are going to come up, and that is going to be more interesting proposition. So we look forward with good amount of confidence as far as domestic portfolio is concerned. Come to JLR portfolio. Again, the charter is very clear that from 2025, and I think the vehicles which are now going to be offloaded onto the roads would be the electric vehicles from JLR. And I see the possibility of, I think, higher demand for electric vehicle as the particular situation of price differentials comes down. In fact, one of the things which I am seeing as a possibility in the global market, with the battery swapping technology becoming a reality, I see the vehicle cost and the battery cost be separated out. And the batteries would be available on a pay-per-use basis, vis-a-vis the vehicle which would be available on a capital basis, a capital cost basis. If that situation pans out well in the global economy, which I see a brilliant possibility happening now, that could possibly be a game changer for most of the electric vehicle companies and likes of JLR, likes of Volvo, who have basically talked about in global market going into electric vehicle fully, that those companies are likely to see major shift and major benefits compared to their peers in the marketplace. So I remain positive on that front as well. And if the unloading or offloading or demerger of JLR into a separate company, listed company takes place, that would be, I think, a real game changer to watch about. So we consider all the possibilities to stay invested in the Tata Motors in your investment portfolio.
Absolutely. Thanks, Deven, for getting us the details. And it's interesting to see the kind of turnaround that we've seen on a Tata Motors, because I was just reading something where it's clearly indicating now that it's actually beat Kia, which is Korea's company, a Korean company, to become the 16th most valued automaker in the world. And initially, we were always seeing a fight for them in the domestic markets, but globally now you have Tata Motors, which has taken over Kia. And very lastly, if you see in terms of the Tata Motors A shares, they've seen a rise of almost 16 to 17% as we speak. It's an all-time high of 435 rupees per share. And you have Tata Motors, which is at 640, which is a marginal uptick right now. So it's going to be interesting as to how investors react to the arbitrage opportunity. But thank you, Deven, so much for joining us on the show and giving us the details and throwing some light and perspective in terms of what could be in store for the investors of Tata Motors as well as Tata Motors DVR. That's a wrap from Alex and myself. Lots more lined up on the other side. You will hear the management of Mahindra Holidays, who Alex will be talking to in just a while. Please stay tuned.